Hello everyone. I have in front of me a number of different items, and I'm going to talk to you today about the concept of having different types of businesses. The first type of business you might come across being held together is being held together by the fact that it just has one owner. One owner is typically not going to have too many arguments with themselves, and if they do, they're certainly not going to do it out loud, and if they do, they're probably going to end up in a rubber room. But the first type of businesses owned by a sole individual has the name of sole proprietorship. The sole proprietorship held together would be like this tape that I have here. Different concepts. All the tax, all the liability, everything is paid for by that individual. One person, one group. That sole proprietorship would be like Glenn Smith Accounting. Glenn Smith Accounting could be operated just by Glenn Smith, have only one employee, and therefore it doesn't need to be anything but a sole proprietorship. The problem, of course, is that there's a lot of liability that goes along with running a business. Might want to be able to share. The next type of business, the type of business that's usually shared, is considered a partnership. Now, it also has to be held together by certain things, such as this paperclip and these paperclip holders. Well, a paperclip holder doesn't have just one paperclip in it. There's another paperclip in it. There's another paperclip in it. There's another paperclip in it. And on and on and on. Just like a partnership. The partner is responsible for what that partner does and what that partner holds. But the problem with the partnership is there's unlimited liability. Remember how when we talked about the sole proprietorship, we said there's unlimited liability, that one person owns all the liability? Well, unfortunately, in a partnership, that one person, any partner, holds the entire liability for that partnership. Again, it's a flow-through organization, and each person is required for the amount of taxes, but that they have in their ownership portion of that partnership. But if I was to take all of the paper clips out and leave only one paper clip in the container, is this still a paperclip holder? Absolutely. It's still a business. And if all of the other partners fall apart and don't pay their taxes or act appropriately in the partnership or sign agreements that the partnership will have, they will also have to pay. That one person in there will be required to pay for everything the other partners do. And so I would say, if you're an accountant, you don't tell people to go into partnerships because there's unlimited liability, even though there's somebody else there to take part of the risk. Okay, so there's some other types of business that we need to talk about besides sole proprietorships and partnerships. There's also LLCs, which are limited liability companies. There's limited liability partnerships, so that perhaps only one person is responsible, but those silent partners that may exist, they're not responsible. It's only that one person, the general partner, that's responsible. But in LLCs, it's still going to hold things together. You're still going to have the opportunities to bind the company together and bind the company legally. In an LLC, it's still a pass-through organization because the taxes pass through to the individual who owns the LLC or the individuals who own the LLC, which differs in some ways to a stockholder. A stockholder is stock. A corporation is still going to be responsible for holding things together. They're still going to be something that works just like a stapler, just like holding the corporations together with limited liability. The beautiful thing about the corporation is the owners of the corporation are only responsible to the amount that they own of the corporation. By the way, did I tell you that I own Boeing? Yes, it's true. I am the owner, one of the owners, of the Boeing Company. I own 4 shares of stock, to be exactly, in the Boeing Company, so you can imagine my dividends that I get every quarter are not all that big. When I get my $1.67 check, of course, I cash it like anything else. I'm definitely going to accept that $1.67 they want to pay me, but I'm not responsible if Boeing signs a contract for $25 million. My 4 shares of stock are not going to be held as I owe them $25 million. Now, if Boeing was to go bankrupt and not have any money to pay stockholders back for some reason, well, obviously, I would lose some money. Probably 4 times whatever the current share price is. And whatever the share price is, of course, is the same as whatever the stock price is, because stock is also called your shareholders' interest. You have shareholders or stockholders' equity as part of your balance sheet. Now, in the next video, I'm going to talk a little bit about what a balance sheet looks like and how a balance sheet operates, and how you put the 4 financial statements you'll need to know together.